Estamos con Andrew Edwards, él es director general de ETX Capital en Londres. Mr. Edwards, thank you for talking to Business TV.
Pleasure.
The most important newspapers of the world are writing really strong headlines about Spain right now. It may have a direct effect on what people abroad think of Spain. What is Spain's brand image right now?
Well, I think firstly it's perceived to be a big country in Europe, and that concerns people. It's the fourth biggest country in Europe. It's got some positives, and there's been a lot of positive talk more recently, certainly in terms of your export to GDP ratio, 25%. That's strong, which means people do believe that Spain can trade out of its problems in the longer term. However, I think right now in the shorter term, people perceive Spain to be a country that is heavily indebted because of long-term investment in property. More recently, the issues with Bankia have given people more concern. And now I think the biggest issue has shifted from it being a capital problem to a liquidity problem. And we all know once it becomes a liquidity problem, people get very nervous.
And also there is the financial system. What's wrong with it?
The European financial system?
Oh, the Spanish one.
I think at the end of the day, the problem now is Spain needs to shore up its banks. To do that, the banks need to try and raise capital. They can't do it at the moment, which means Spain needs to put the money in.
Are you for or against a rescue?
I think for Spain it's very different to, and I think the problem is, we're talking about the brand image. Spain is concerned that it's perceived to be a Greece, Portugal and Ireland problem. And those people who don't really understand the problem do see it as another Spain, Portugal and Ireland, Greece, Portugal and Ireland. Whereas people who understand the problem realize that it's a much bigger country, potentially a bigger problem, but it's a country that has a strong economy, an economy that can dig itself out of trouble. So I don't believe that it's a bailout problem. I think Spain needs to work with the international community and find ways of getting some short-term support to allow it time to rebuild itself.
And what about Greece? What if Greece exits the euro? What would be the consequences for the rest of the European Union?
It all depends on how it's done. If it's a managed exit, and that is the way it seems to be going now, even Spain is talking about an exit, people are doing it in the right way, and I think as long as it is something that is managed, I don't think it's a major catastrophic problem for Europe. I think, however, if it becomes more of a rebellious exit, then there are bigger problems to deal with, because what it means then is not only a country pulling out of the euro, but it's almost saying we're not going to pay our debt. And I think people get confused with leaving the euro and a bailout. They're two completely separate things. Even if a country does leave the euro, it still has to pay back its debts. And I think as long as countries work with the European community to exit in an orderly way, then people will understand that they need to obviously refinance the country and manage the repayment of the debt over a longer period of time.
And is ETX ready for an eventual possible Greek exit of Europe?
We are. We've spent a lot of time on planning for an exit. We are, at the end of the day, we're a trading company, so we trade in multiple assets and classes and currencies. And we've already simulated a new currency in our systems, in our back office, in our risk management systems. So we could handle a Greek exit quite easily. But what we don't have is lots of euro contracts, and I think it's other companies involved in export and import in and out of Greece, where contracts are involved, where there's a much bigger problem to deal with.
It's already been a really long crisis, and we can't see the end of it yet. And what's the key? Lack of liquidity, lack of credit, lack of confidence, lack of transparency?
Well, it started with a lack of capital. There was a disconnect between the money banks had on their balance sheet and the assets and the lending that they were giving out. We know that. It's gone beyond that now. I think now it's become much more of a liquidity problem and therefore a confidence problem. And we've just seen in the last few days that as soon as that liquidity problem becomes a confidence problem, it manifests itself. And we've seen 60-odd billion euros leave Spain last month, and bigger concerns about what euros will leave Spain this month.
And even given all that's going on, is it possible to make money?
You can make money. You have to look at look at the world in a very different way. So most of our clients who used to buy Spanish shares and hold them and wait for them to go up have had to change their trading strategies completely. Now it's much more about short-term movements. I think we've seen a lot of people lose complete confidence in the equity markets. So we're seeing a lot more people trade currencies, trade commodities and trade indices. And I think when they trade those non-equity products, they also learn the concept of going short, which means you can take advantage of short-term downward moves. So you can make money. I think there's a lot of controversy over whether people should be making money in these markets, but then it's the people who make money in these markets or people who trade in these markets that create fair value for assets. And I don't see why they shouldn't, be given the opportunity to do that. Mm-hmm. But in terms of long-term holding equities and waiting, I don't think people have got the patience, and I think people are too nervous.
Mm-hmm. Spread betting,
yes.
How does it work?
Well, spread betting is, it's got sort of three definitions. It can be called a CFD, a contract for difference. It can be called a spread trade or a spread bet. In its simplest form, what it means is it allows people to trade the markets without having to actually buy shares or buy contracts or buy assets, which means it's much easier to do. You don't have to take delivery. It's much cheaper to do, and it allows people to go long and short the markets. So in a way, it's a synthetic way of trading the global financial markets.
And what are the risks?
The risks are that, the risks like all trading, the risks are that you're not disciplined and you lose your money. And we spend a lot of time educating our customers about risk management. Nobody wants to see their customers lose their money. That's one risk. Another risk is that in the same way that you put your money with a bank, you're putting your money with a company like ETX Capital, and there's always risk of default. And that's something that people are becoming a lot more aware of and concerned about. And as it's proved, the companies that are surviving, the ones that run their businesses properly, which is the way we like to do things. And I think the other risks are really down to just the discipline on trading. Mm-hmm. And in these very volatile periods, you could be very right, but because of all the movements in the market, you can get caught out at the wrong time because of all these economic factors that are affecting the prices of assets.
Mm-hmm. And what's the difference between ETX Capital and some other companies?
I think the big difference is we focus on education. We like to educate our customers. Like I said to you, nobody wants to see their customers lose. They want to see their customers win. We used to be a high net worth only provider, which meant that we serviced very wealthy customers, and therefore we had to look after them. And I think that customer service element to the way we run our business is part of our DNA. So I think the real difference for us is the education and the customer service. In terms of the platform, it's very similar to most other competitors. Most platforms these days are very evenly priced anyway because of the transparency of online trading. So it really comes down to the human pieces that you can add to your service, like customer service and education and help.
Mm-hmm. Mr. Andrew Edwards, CEO of ETX Capital, thank you for talking to Business TV.
Thank you. Pleasure.